Welcome back. Bharti Airtel is a stock that we're focusing on. It's up 4.5%. Now, all the three companies have reported their numbers. That's Reliance Jio, Bharti and Vodafone Idea. And it appears that Bharti's performance is superior to peers. So point number one, in terms of revenue growth, Bharti's revenue growth at 7.4% for the India wireless business was better than what Vodafone Idea and Jio reported. Secondly, in terms of the average revenue per user, which is the monthly bill of all of us. So while Jio has reported the highest improvement in their ARPUs, Bharti continues to be a premium product. Its ARPUs are at an 11% premium to that of Reliance Jio. And thirdly, and I think that is the biggest thing that the street likes, they're saying that for the first time since Jio launched in 2016, Bharti's subscriber metrics are higher than that of Jio. So this quarter, Bharti's added 13.9 million subscribers, while Jio's only added 7.3 million, which means it's higher than Jio by nearly 70%. I think that is the data point that the street is latching on to. So while Vodafone Idea continues to weaken and lose subscribers, it appears Bharti is a bigger beneficiary of that and seems to be gaining market share. But that's about telecom. Let's move on to IT. Intellect Design Arena has reported positive revenue growth on a year-on-year basis for the first time after 4 quarters. On a quarter-on-quarter basis, we're looking at a revenue growth of close to about 8.5%. We're now joined by the management of the company, Arun Jain, the chairman, as well as MD. Mr. Jain, thanks so much for joining in. What is the outlook looking for the second half of the year?
Let me just introduce Intellect from the perspective saying that this year, this quarter, this half year was very good for the Intellect. Outlook is definitely positive when we are going forward. Our two segment where we are product retail banking segment, our products are classified as a number 1 by IBS Cable. Wholesale banking software product is also number 1 in the world. These two products being categorized number 1 in the world is driving us more traffic to our customers, and our price points are improving on it. So this year we grew 14% year on year to 373 crore. The beauty is that our EBITDA margin is moving from 20% to 24% level and has a potential in next 4 quarters to go up to 30% level because of the nature of the business where license, AMC, cloud revenue and implementation revenue, there are 4 streams of the revenue streams which drives a higher margin business along with the traction on the top line because of our market leadership in the advanced market. Our market leadership in advanced market is close to 57%, which is one of the largest market share of advanced market by any other product company out of India.
Mr. Jain, how is the increasing proportion of cloud revenues going to alter the revenue growth profile in the medium term, sir?
I think you have 2 business streams. One, GTB business, which runs on a license model, and another is the GCB business, which runs on a cloud and Seek business. So these 2 streams, we built it up that one is not cannibalizing other thing. So we're building both as a growth lines of business.
Okay. Your deal pipeline is largely on a flatter side, both quarter-on-quarter as well as a year-on-year basis. So what visibility do you have for the second half of the year? What is the kind of growth that you're looking at?
We are not giving any guidance for the future growth, but the pipeline-wise, this quality of the pipeline is changing. I mentioned last time that our quality of pipeline, now we have qualified only that pipeline which we have submitting the proposals. So this is a high quality pipeline, not the question of 41 destiny deals which we have. Those defines our business model. So last time we are now looking lesser number of deals than higher number of deals, but of the higher magnitude and size. Our entry to the US market this time, the 2 consecutive quarter we won, 3 consecutive quarter we won deal in US market is a very, very positive traction because US market is high paying market for any product company. And more to enter organically.
Mr. Jain, okay. Mr. Jain, your total debt has gone down. Could you give us an indication of what interest expenses will be, say, in FY22?
I think FY22 will be almost, we may be offsetting maybe the interest cost. We have come down totally cash flow, which has moved operating cash flow is 216 crore in first 6 months. which is a very, very positive sign. It is better than expected for our planning process. So 216 crore has come now. There's a term loan of 60 crore and around 10 crore of the overdraft line. So both are not substantial number. And this is a foreign currency loan. So interest cost is 3-4 crore a year. And it will be lesser than that for next year.
Your margins at the EBITDA level are close to this 23.5% band. Can you improve it from here?
Yeah, that's right. I was mentioning that last quarter it was 20%, and this quarter it's 24% on sequential basis, while half year is 23%. And from here, the potential of this margin to go up to 30% in next 4 quarters are visible to us. So we can operate the company at 30%.
Just one last question.
Yeah.
Okay. Just one last question. Which product segment is seeing the most sort of accelerated transition to cloud, Mr. Jain?
There are 2 segments. One is the AI machine learning cloud, which we have in US, where we are selling the data algorithms. That's the traction. And then core banking business and lending business is getting into Europe. They are attracting the cloud revenue going forward.
Thanks, Mr. Jain, and all the best for the coming quarters. We'll slip into a very short break. On the other side, the management of Bajaj Healthcare will join in to detail their Q2 numbers and give us an outlook for the future.